Tiffany, I'll start with you. You just heard the numbers off of Bank of America. But there is a distinction now between what we're seeing from the likes of a Goldman Sachs, for example, on one end of the spectrum, and a B of A, and I don't know where you want to put JPMorgan in the middle there, though obviously that was a blowout number 2 in many ways. If you could only buy one bank today, which would it be?
Oh, for me, it's a toss-up between JPMorgan and Goldman Sachs, hands down. And you absolutely make a correct point. There's a difference between these banks, and especially when it comes to JPMorgan and Goldman Sachs. These guys have diversified revenue, right? Consistent dividends. I'm looking at these. I've actually viewed these as real staples in our client portfolios for quite some time. When you look at what they did last year, not cutting their dividend in a really time, in a time of real stress. When you looked at what saved them in terms of revenue last year, their diversified income, trading revenue, also some asset management revenue and advisory revenue, right? And we're seeing that continue with these blowout numbers versus a bank such as Wells Fargo that's just so heavily relying on their consumer banking business. So just a little bit tricky. So I really feel like with these particular banks, that the line between defensive and cyclical stocks is really blurred right now. It's really hard to tell.
All right. Hey, Sarat, I'm giving you the same choice. You like B of A this morning, or do you like Goldman or JPM? Or something else?
So I'll
you can like
I'm going to change it around.
You only want to be in fintech.
Like Tiffany, I like JPMorgan. They're the gold standard. They have a diversified asset base, no question on that. But what I'm looking for is who's going to give me upside in the next 2 to 3 years. And I think the company you want to look at is Morgan Stanley. They've really restructured their whole business. Their asset management business is going to give them huge leverage. And I think that's where you want to be. The issue that you have with some of these other banks is the trading revenues really don't get the valuation going forward because they're really, the market looks at it as one time. So you want recurring revenue and you want earnings that are going to grow through the recurring revenue. And by the way, JPMorgan has a huge asset management business to that. So does Morgan Stanley. Bank of America is going to be having a higher beta for you because the question that I have for them is what is your loan growth going to be coming forward? That's really where they have the leverage, and a lot of that has to be dependent on the economy and the way things are going, especially with the consumer economy. And if businesses start expanding, Bank of America will have, in the short term, higher upside.
Shepard Smith here. Thanks for watching CNBC on YouTube.